All right. I'm excited for this one. I got the CleanSpark hat on. I know I teased you guys on X the other day saying this would be a video, but it's Friday, so I figured why not have the face-to-face conversation. I've turned members only chat off for now. If it gets too spammy, I'll turn that back on. If you have a question, you want it answered, I would suggest becoming a member. It's like $3 a month to chat, and I will for sure get to your question. If you're not a member, you kind of risk me not seeing your comment or question or not having time to answer it. This is a big one though. We're going to talk about CleanSpark. Last time we chatted, there's been a lot that's happened since then, is what I'll say. I guess I'll start with the fact that, and I'll pull up my screen here. A few weeks ago, I put out a video titled "MicroStrategy Just Ended Bitcoin Mining Stocks Forever." I never would have guessed in a million years that video would become such a huge success for my channel. I mean, we're talking 80,000 views on it. Incredible. But not even just from my channel. This video literally changed the trajectory and the layout, the landscape for the entire Bitcoin mining industry as a whole. I mean, CEOs watched this video and decided to make moves based on it. In that video, just to give you some background, I talked about how MicroStrategy was taking out these convertible notes, and that's going to be the theme of this live stream / video. They're taking out these convertible notes, and historically, with convertible notes, whoever buys them will actually short that equity. So they'd short sell that equity to give them downside protection. So they're hedging their long exposure. Think of Think of a convertible note as kind of a call option on a company, because you can convert it to equity at a premium and you have essentially a strike price. So you have significant long exposure if you buy a convertible bond. So historically, convertible bond buyers have shorted the same equity to hedge that downside and take advantage of some arbitrage opportunities. However, what Wall Street ended up doing, and it makes a lot of sense, is instead of short selling MicroStrategy, they decided to short sell the rest of the Bitcoin mining industry. So the CleanSpark's, the Marathons, the Riots, the Irons, etc. That way they can get that downside protection if Bitcoin falls without hurting the odds that their convertible note on MicroStrategy will exercise profitably, because they don't have a short that's holding the share price of MicroStrategy down. I know that's a lot of words to say a small amount of things, but I said this video changed the landscape for all things Bitcoin, the entire Bitcoin industry, and it did, because ever since this video, I actually came out and said I had a few ideas of how companies could counteract the short pressure that was being put on them. My first idea was join the party and issue their own convertibles. What have all of these Bitcoin mining companies done and Bitcoin related companies done? They've now issued their own convertible notes. Now, all of them look a little bit different. And you're going to notice today, the focus is going to be on CleanSpark. I believe CleanSpark has a master plan at play here that no other company can take advantage of. And I really don't think Wall Street, retail investors, or just investors in general are aware of this master plan and what might play out. So at a certain point in this live stream, I'll show you my updated fair value spreadsheet for CleanSpark. And I will also show you my HODL yield matrix. So that's where this live stream is going. I hope that sounds exciting to you. If you wouldn't mind hitting the like button, subscribing if you're new here, returning not yet subscribed. I'm also entirely self-funded and independent. So shout out to all my paid monthly members, and consider joining that by hitting the join button. Anyways, let's talk about this. The common theme today is going to be what the market rewards short term is not always the best move long-term for a company and its shareholders. So a lot of people, and I kind of regretted breaking the news about the convertible notes, because then everybody said, well, in order to have the stock price go up, you have to issue convertible notes. So everywhere on social media, people have been just complaining. When are we going to issue convertible notes? CleanSpark was one of the last ones to do so. They were very patient with it. But then it quickly evolved into you have to buy spot Bitcoin with the convertible debt. And that is where I fundamentally disagree with the market. I fundamentally disagree with a lot of people you guys probably follow on social media. I believe the best method or the best way to spend convertible debt is not buying spot Bitcoin, but instead deploying that cash to build a mining fleet, which actually ends up making you more Bitcoin in the end, and you actually have an initial profit margin that you see. I'll show you that on the spreadsheet when we get there. So the one thing with CleanSpark is they are the only company now, and I can pull this up actually, bitcointreasuries.com. At the end of this month, CleanSpark is going to have the fourth largest HODL balance of any company in the world. The fourth largest, and they have not bought a single Bitcoin at spot prices. All of this has been self-mined Bitcoin. They have the fourth largest HODL of any company in the world. Better yet, CleanSpark by far has the cheapest or the lowest cost basis on their HODL of any company in the world. And anybody that decides to buy spot Bitcoin with debt is essentially raising that cost basis every time they do that. The thing with mining Bitcoin is it's a relatively fixed cost for 4 years, and then it doubles, but it's relatively fixed. So if Bitcoin today, it's trading at $100,000 today, if it were to double, well, CleanSpark's cost to mine would stay relatively flat, around $40,000 per coin. Whereas those spot Bitcoin buyers would have to buy Bitcoin for $200,000. So the call option still is in the Bitcoin mining companies. It's not in buying the spot Bitcoin itself. And again, I know I fundamentally disagree with a lot of people that have tuned in on this subject. The thing I really like about CleanSpark's convertibles, and I guess I can pull this up, is obviously they have zero intent of purchasing spot Bitcoin. And that's how I would prefer convertibles to be done. Instead, they're going to use the proceeds to pay off their line of credit with Coinbase, which is basically an 8% debt line of credit that they just paid off with 0% debt. And they're also going to use it for CapEx, so capital expenditures at the company, and for acquisitions. And that is a move that for the next year, maybe 2 years, is going to minimize or prevent any future dilution. And that is a very, very, very important point, because the companies that are taking out convertible debt and buying spot Bitcoin with the proceeds, they're not offsetting any dilution that they need to take on in order to run the company. Now, that's why I'm so excited about this. There is no company in the world now that has a HODL balance and has a lower risk of that HODL balance going underwater than CleanSpark, because CleanSpark's cost basis is so low. And what that gives the company is it gives them obviously a cushion in bear markets that other companies don't have anymore, where CleanSpark is going to be profitable on their Bitcoin HODL balance longer than anybody else in the world. Now, I'll show you the HODL yield matrix here in a little bit, but that's where that really comes into play. There's companies out there that, yes, have a HODL balance, but their cost basis on Bitcoin keeps rising higher and higher and higher. Namely, I'll use Mara or Mara, however you like to say it. So the future, I believe, when it comes to offsetting dilution and growing these companies is actually in earning yield on the HODL balance. So the market for this is still developing, but think lending your Bitcoin to banks, to well-reputable, highly reputable banks that are going to try and earn a spread on that Bitcoin. You're lending that Bitcoin out, or you're lending that Bitcoin out to ETFs to provide liquidity, or you're even just selling calls, or you're selling puts on your own HODL balance. Now, CleanSpark is going to have the ability to do that in a bull or bear market without the pressure of their HODL balance potentially going underwater, becoming unprofitable, and being forced to sell that Bitcoin. So in my personal opinion, and I've said this now a couple of times, CleanSpark should probably trade at a premium just because they have the lowest bankruptcy risk and they have the cheapest cost basis on their HODL. That's a huge, huge deal. Now, I'm going to do the math later in the Excel spreadsheet, but maybe I should pull it up on the screen now. I'll pull up my CleanSpark fair value spreadsheet. The thing with doing a live stream is going to be a little more messy than doing a video where I can cut things in and out. And somebody says I'm a little bit self-centered about my own impact. Maybe, I don't know. But that video was very, very important for the entire industry. Okay, let me pull up my Excel spreadsheet and I will show you the math of this here. Just give me a moment. Why this is going to matter so much. So here we go. Share. And let me switch my camera angle here. Here we go. Okay, so I wish I could pull my face cam to the other side, and I don't think I can. But if we do the math of this, so CleanSpark just took out a $500 million convertible note. So they're taking out $550 million of debt with an option of an additional $650 million. For simplicity's sake, I'm going to say they just borrowed $500 million. I think that's $500 million. How many zeros do I have here? No, I need one more, I think. Let me change this. And all these spreadsheets are made available in the Discord server as well. And I got to unprotect the sheet. Sorry, this is a little bit messy. Okay, so they borrowed $500 million. You have two options if you borrow money, if you borrow $500 million. Bitcoin's trading at $100,000 right now, so you can choose to go out in the spot market and buy 5,000 Bitcoin at $100,000 per coin. If you have $500 million at your disposal, you can buy 5,000 Bitcoin. And I don't want that. I want that a general number here. Hang on, hang with me. Nope. Here we go. 5,000 Bitcoin you can buy with that $500 million. Okay, that gets you 5,000 Bitcoin. Remember that number there. Or option B, you can take this, and I'll just do the old copy paste. You can take this $500 million, and right now, if you do the research and do the math, you can build out a 16.5 exahash per second mining fleet for this $500 million. And if we right now, here's the math, the simple math for if you want to do your own spreadsheet. The simple math is it costs about $30 million per exahash of mining capacity. So that's where I come up with 16.5 exahash per second of mining capacity that you could build out with $500 million. And 16.5 exahash per second right now means you can mine basically 300 Bitcoin per month. If we assume that the difficulty rate increases, obviously it's not going to continue to it's not going to continue to give you the ability to mine 300 Bitcoin a month. That number is going to go down. But let's say over the next 4 years, it averages 200 Bitcoin per month, 16.5 exahash per second. Well, we can do the math here and say, well, if we do 200 Bitcoin a month times 12 months times 4 years, you're looking at 9,600 Bitcoin that you just mined using your $500 million. Let's say that the price of Bitcoin stays flat at $100,000 per coin. So we'll go $100,000 times the 9,600 Bitcoin. And let me change this to a number so we can better see this. That gives you $960 million worth of Bitcoin. So now if we subtract the $960 million, or we subtract the $500 million from the $960 million, you can see that taking the $500 million and choosing to build a mining fleet of 16.5 exahash per second actually gives you an additional $460 million of profit right off the rip. And that's assuming the price of Bitcoin stays flat. $460 million of profit off the rip that you don't get if you're just buying spot Bitcoin with $500 million. So although right now the markets are rewarding the companies that are buying spot Bitcoin, it's actually a better move fundamentally for a business to build out a 16.5 exahash per second mining fleet. Now, we can think about cost per Bitcoin, okay? Sure, if you buy spot Bitcoin, you don't have a cost per coin. Or you don't pay energy to buy your Bitcoin, I guess is what I'm trying to say. But when you mine Bitcoin, you do have a cost per Bitcoin to mine it because of power and because of energy and transmission and things like that. Right now, CleanSpark's cost per Bitcoin is basically, it's shy of $40,000. Let's say it, averages $50,000 over the next 4 years. Well, you're just dividing your profit in two, and you still have much more profit at the end of the day than these companies that are buying Bitcoin at spot prices. So you might be thinking, well, Rex, the risk there is it takes time. It takes time to build out a Bitcoin mining fleet. And yes, that's true, and that is a risk, but you have to remember, let's say Bitcoin does run away from us. Let's say Bitcoin runs away from us, and it goes to $350,000 in 2025. You might say, well, the spot Bitcoin buyer is going to be better off because they bought Bitcoin, a ton of Bitcoin, at a certain price, and they're seeing the reward of that now, where you're still stuck building your mining fleet out. But the part of that people don't understand is if Bitcoin runs away in price, it would actually lead to a supply crunch of mining infrastructure, of mining rigs, infrastructure, and that would make the mining infrastructure, so think rack space, think those megawatts, think the mining rigs themselves, it would make all of those inputs worth so much more money because of that supply crunch. I can give you a quick example. Not a long time ago, CleanSpark came out and said that they acquired a call option essentially to acquire the latest and greatest Bitcoin miners, the S21 XPs, for $21.5 dollars per terahash. So that call option looks really, really good right now because that those same miners right now are selling for $30 per terahash. And they have the right to acquire those miners right now for $21.5 per terahash. So there's another bump in premium that a company like CleanSpark should have. And that's just with Bitcoin running from 60,000 to 100,000 that the price of those latest and greatest mining rigs has increased and appreciated. Well, that increases the assets of the company as a whole. So if Bitcoin truly does run that quickly, which, you might have your own opinion of how likely that is. Let's say it does happen. The mining companies are going to benefit almost equally to those companies that are choosing to buy spot Bitcoin with the $500 million. So I'll move to my HODL yield here. My HODL yield matrix, again, the spreadsheet is made available to my members. This is what I believe the future of this industry is going to be. Let me take a sip here. And this is a big deal. Out of all the mining companies that have taken out convertible debt, namely Iris, I guess it's Iron now, and TeraWulf are the two other companies that chose not to buy spot Bitcoin with the proceeds. So I actually applaud them for that. I think that's the right approach. But what separates what CleanSpark did from them is that CleanSpark has a HODL balance. Iron and Wolf do not have a HODL balance, and a lot of people are going to dismiss that, but hear me out. Within a couple of years, I think those companies will have made a big mistake. And that's because I think we're gonna see a time period now where companies can earn a yield, a set percentage on their HODL balance, again, by lending their Bitcoin out to, let's say, ETFs or exchanges to provide liquidity, maybe to reputable banks who will try and earn a spread on the Bitcoin before returning it to the company. Maybe it's just the company itself, hedging either by selling call options or selling put options. I estimate that CleanSpark's HODL balance by 2026 will reach 26,500 Bitcoin. And let's just say Bitcoin's price stays flat for the next 2 years. And let's say that CleanSpark earns a 4% HODL yield on this. And I have a drop down here. You can choose anywhere from 1 to 7%. I choose 4%, which is essentially the risk-free yield right now. If Bitcoin can get a 4% yield on their 26,500 Bitcoin that are valued at $100,000 in 2026, that is $106 million coming to the bottom line of the company that these other companies that don't have HODL balances don't have access to because they don't have a HODL balance. They don't have anything they can yield or leverage there. Now, you might argue, well, they have HPC AI. Well, show me the legitimate contracts there. We've been talking for 2 years now about all of this demand and these high quality customers that have super high interest in our HPC and AI megawatts. Well, I'm going to tell you today, there's been a distinct lack of difference-making contracts that have been signed in the HPC AI space because the legitimate companies or the legitimate potential customers are doing it themselves. They're doing it themselves, or they're working with Core Scientific, or they're working with Microsoft, or they're working with these other large companies. I personally believe the future of HPC and AI is not in a remote data center, not in a remote data center where there's any amount of latency. Because latency is a poison to what AI is trying to accomplish. And people don't realize that. And so companies are trying to sell their shareholders on a pipe dream. Now, I will change my mind when we have a difference-making contract get signed with a legitimate customer that has revenues and profits. But right now, there are very, very few HPC and AI customers that actually have revenues and have profits that are safe customers, that are high-quality customers. It doesn't exist for the most part right now. Could that change? Absolutely. But I don't think within 2 years, companies are going to be bringing $106 million to their bottom line from HPC and AI. Because let's say they do that in revenue, and they always talk about the high margin revenue, 80, 90%. But the problem is HPC AI is, I've heard estimates 8 to 10 times more expensive to develop than Bitcoin mining, which means the hardware payback period on GPUs, for example, is much longer than that, or is much longer than Bitcoin mining rigs. And you also have the fact that you can look it up, Jensen Huang's law. Every 2 years, GPUs are going to more than double in efficiency and performance, which means there's always going to be a rat race for the latest and greatest GPUs. Because your customers aren't going to go, they're not going to work with the GPUs that aren't the latest and greatest. And that's a fact of the matter. So every 2 years, we're going to be in a refresh cycle. So there's never going to be a time period, in my personal opinion, where these companies that are transitioning into HPC AI are actually going to have these revenues hit their bottom lines and go to retained earnings. But when it comes to the Bitcoin HODL yield, absolutely. This is revenue that's going to go straight to the bottom line, And a company like CleanSpark, that has such a low cost basis on its Bitcoin HODL balance, is going to benefit from a HODL yield more than any other company out there. And it's not even close. Because then all of a sudden, we have a company in CleanSpark, let's say by 2030, let's move to 2030 now. Let's say Bitcoin's hit $250,000, which a lot of you would say is conservative. I estimate their HODL balance will reach 54,000 Bitcoin by 2030. And at a HODL yield of 4%, the company would be bringing in $500 million, more than $500 million to their bottom line. More than $500 million. And at that point, you are completely offsetting all cash expenses at the company, which means goodbye dilution. It means hello growth without dilution. It means hello share repurchases. It means hello dividends. That's what that means. And no other company than CleanSpark right now is set up to really take full advantage of this. Because either, like I said, the companies that aren't buying spot Bitcoin, they don't have a HODL balance. Obviously that makes sense. Why'd you buy spot Bitcoin if you don't hold the Bitcoin on your balance sheet? Doesn't make sense. The companies that aren't buying spot Bitcoin don't have a HODL balance. And the companies that are buying spot Bitcoin have a HODL balance, which means their cost basis is always going to go higher and higher and higher if they keep buying spot Bitcoin. CleanSpark is the only company in the middle that has a HODL balance and is not buying spot Bitcoin, increasing its cost basis, also increasing the risk that it goes underwater in a bear market. And the thing about a HODL yield, is you can make 4% on your Bitcoin HODL in a bull market and in a bear market by selling puts, selling calls, lending the Bitcoin to provide liquidity, lending the Bitcoin to reputable banks who try to earn a spread on it. This is what's going to bolster revenues and profits at Bitcoin mining companies. I just don't think most people see this yet. But to me, this is the future. And when I talked to the CFO of CleanSpark, I just talked to him last week, I think it was. He's on board with this. And I told him, I'm so glad you're thinking about this because I haven't seen any other company talk about this yet. And this is what I think CleanSpark's master plan is. because I showed you the math. We can review this all night long. I showed you the math. Mathematically, although the market isn't rewarding it right now for whatever reason, mathematically and fundamentally, it's better for CleanSpark to go build out 16.5 exahash per second of mining capacity with their $500 million rather than purchasing spot Bitcoin with their $500 million. Because at the end of the day, their cost basis stays lower. They get an additional 4,600 Bitcoin added to their HODL balance, and they get an additional $500 million in immediate profit that the companies that are buying spot Bitcoin don't get. So you can beat down you can beat down a company that's fundamentally improving every day, every minute, only for so long. Only for so long. And you think about this. I posted a tweet about this the other day. There's the two different hot strategies right now in the marketplace are companies buying spot Bitcoin and companies pivoting to HPC AI. Let's think about this for a little bit. Companies buying spot Bitcoin. They are at a minimum reducing the downside of Bitcoin's price, but they're actually probably boosting Bitcoin's price, which is why it keeps going higher and higher and higher, which benefits CleanSpark's fundamentals without CleanSpark having to spend a single dollar on buying spot Bitcoin. HPC AI, all of these companies transitioning to HPC AI. That is taking current hash rate offline, and that's taking future hash rate offline, decreasing the total network hash rate. Again, improving CleanSpark's fundamentals at the end of the day without CleanSpark having to spend a single dollar. So other companies, and tell me where you've ever heard this before. CleanSpark's competitors, they're spending all of their resources on buying spot Bitcoin or transitioning into HPC AI, and by their competitors spending their money, CleanSpark's business gets stronger. Where else does that exist? So it's only a matter of time, in my personal opinion, until the markets start to respect that. So I started the video off with what the markets reward short term is not always the best strategy or the best move long term for a company. Okay? And I hope I'm driving home that point. I hope everything I've said makes sense, because it makes sense in my brain. Sometimes I don't explain it well enough. So if you have questions, ask me in the chat. But this gets me so excited. And people are going to sit in this comment section, tell me I'm dumb, tell me I'm stupid, tell me I'm wrong, tell me the market's right. But you know what? I've been here before. 2020, when CleanSpark was at $2 per share, and I said CleanSpark would become one of the largest Bitcoin miners in the world, people told me the same thing. They said I was dumb, stupid, ignorant, didn't know what I was talking about. And I was there buying when everybody was selling or short selling. Again, at the end of 2022, and I'm not trying to toot my own horn here. You can just go back on my YouTube channel and see this stuff. At the end of 2022, when everybody was selling Bitcoin mining stocks as a whole, what were we doing on this channel? We were banging the drum that now is the time to buy Bitcoin mining stocks, and CleanSpark in particular. But again, because I have such a contrarian mindset on things, I said this on Twitter too today. If I just went with the status quo, or I went with what the popular talking point was, I would get so many more clicks on my YouTube channel, on my X page, so many more clicks. But I don't care, because I'm here to give my honest opinion. And usually what the masses believe and what the masses think is actually wrong. You usually want to be a contrarian in this space. So if anybody can look at these fundamentals and tell me CleanSpark is not undervalued right now, or if not one of the better values of any of the Bitcoin miners out there right now, I don't know. So here's my numbers. And again, the spreadsheets made available in my membership, my members Discord server. I've now assumed that CleanSpark's going to have 3% dilution in 2025. 3%. And honestly, their dilution could very well be 0%. 0% dilution next year. But I assume 3%. Okay, I'm assuming 3%. This is going to be kind of a conservative estimate. I'm assuming that Bitcoin's price will average $125,000 per coin throughout 2025. I'm also assuming CleanSpark's hash rate will average 45 exahash per second in 2025. And I'm assuming the Bitcoin network hash rate will average 1,000 exahash per second. And I assume that at the end of 2025, CleanSpark's total balance will reach 18,000 Bitcoin. 18,000 Bitcoin. And by the way, if you guys haven't realized this, if you haven't realized this, the move CleanSpark just made means that they are fully funded to over 60 exahash per second. So don't be surprised if they far outpace their guidance of 50 exahash per second next year. I wouldn't be surprised if we get into the 60s or 70s because that's fully funded at this point. But anyways, using these inputs, assuming a trading multiple of 10 and putting a 2 times premium on the value of the HODL balance, which is what JP Morgan did in their most recent framework. So I just took a page out of their playbook, copied them. And I assume the company's going to have $750 million in debt with $100 million sitting in cash. So that's outside of the Bitcoin HODL. I get a price target of $30.65, meaning that CleanSpark's stock, in my personal opinion, and I should preface this, I don't like using the words price target because I'm not saying that the markets are going to agree with my sentiment or what I believe. With these spreadsheets, I'm just telling you what I value CleanSpark's company at different Bitcoin prices. The market doesn't always have to agree. And if the market was always right, here's the thing. If the market was right about everything, there'd be no opportunity in the markets. And I believe right now the CleanSpark is such a generational buying opportunity. And that's why I'm banging the table about it so much right now. I don't want to miss this opportunity. But I believe the company's undervalued by 155%, essentially, if these are the inputs that do come true next year in 2025. But if you don't agree with me, you can change these inputs. Anything that's in green, you can change and come up with your own fair value. I want to make a preface here. This doesn't take into consideration any of this HODL yield matrix, which this will become a huge piece of the puzzle, in my personal opinion, in the next 2 or 3 years. I think next year, CleanSpark will start to generate some revenue and income from their HODL balance. I just don't think it's going to be anything too significant. Also, moving forward, we have to think that CleanSpark's business, and if you guys haven't noticed, I think fundamentally, I don't care about emotional traders. I don't care what they think. I think about the fundamentals of a company because at the end of the day, emotions can change much more quickly than fundamentals of a company can, which opens up opportunity because of other people's emotions. So I focus fundamentally on companies. If we think about the future of CleanSpark, I've already talked about so much, so I keep going. I apologize for the tangent here. But if we think about CleanSpark's future, they've said they want to focus on immersion cooling for the most part moving forward, rather than the air cooling facilities. I have been inside numerous Bitcoin mining facilities, most of which are CleanSpark's, but I've been inside of air-cooled facilities, and I've been inside of immersion-cooled facilities. There's one big difference between air cooling. Well, there's two. There's two big differences between air cooling and immersion cooling. Immersion cooling is much more efficient, which obviously will improve the efficiency and hopefully the profitability of the company. But it also requires a much lower head count because the rigs go faulty, they go bad much less often because it's a more controlled environment than an air-cooled facility. So head count goes way down, which is why next year I'm anticipating that head count is only going to increase 5% maybe. I guess payroll expense is only going to increase about 5% next year because their focus is on immersion cooling. So from this point forward, everybody gives CleanSpark a hard time. They dilute to pay expenses. It sucks. They're paying a lot of money. Expenses are out of control. But if we think logically about what this management team has said, and we have no reason not to believe them. If we think logically about this, those cash expenses should start to level off here. If payroll growth stays minimal, if professional fees stay minimal, or muted, if SG&A stays muted, and the downside, and I've talked about this endlessly on X, the downside of convertible notes. I don't want to be the guy that's part of the echo chamber saying it's free money, we're gonna moon, there's no risk with convertible notes, because that's not reality and that's not the truth. And I want to tell you guys the truth. Again, it would get me more clicks if I did that. It would, but that's not who I am. The downside of convertible notes is, what if we do enter a bear market, which at any given point in time is a possibility, because at any given point in time, there's a risk of a black swan event popping up, like the pandemic did just a few years ago. And I'm sure all of you remember that. Nobody planned for that. Nobody anticipated that. That came out of the blue and it caused a bear market. A bear market can take place at any given point in time. They cannot be predicted with any sort of accuracy. And there's so much data that proves that. So the risk with convertible notes is, what if they're forced to convert during a bear market? All of a sudden, you're talking about, well, we're going to have to dilute, in CleanSpark's case, we're going to have to dilute $500 million at the snap of a fingers to pay our debt holders back. And that's really going to hurt shareholders if we're not profitable or cash flow positive. Now, again, I think this HODL yield is going to be protection for that, but CleanSpark is really the only company that has this protection because they're the only company that has a cost basis that's staying low. I said it earlier, their cost basis is lower than any other company in the world right now, which means the risk that their HODL balance goes underwater is the lowest of any company in the world right now. And that is such an operational advantage. And I just showed you the math. Buying spot Bitcoin benefits you in no way, shape, or form. No way, shape, or form. But again, the downside there is, well, company has to dilute $500 million to pay their debt holders back, which could end up bankrupting a company, dare I say. You have the companies that have HODL balances, but their cost basis continues to rise because they're buying spot Bitcoin. Well, in a bear market, let's say their HODL balance goes underwater, they're going to be forced to sell their assets, which is the Bitcoin sitting on their balance sheet, which is why people buy their stock in the first place. And a lot of those spot Bitcoin buyers are not cash flow positive, and they're nowhere close to being profitable. You'll notice kind of a common trend. With the companies buying spot Bitcoin. They're not mining it at a profit. And you can look at the numbers and see that. They're not mining it at a profit. So yes, in that scenario, it makes sense for them to buy spot Bitcoin. But in CleanSpark's scenario, no way, Jose. No way. Because CleanSpark can mine Bitcoin for less than $40,000 per coin right now. Less than $40,000 per coin right now. And Geog Thomas, and I'll get to the chat here. I'm loving talking about this stuff. Geog Thomas says, the fact is CleanSpark is a dog in 2024. Absolutely. And there's a difference between me and a lot of the emotional traders out there on X. They're going to lose their minds because they don't have any confidence in their research. They don't have any confidence in their own understanding. And they'll say, well, CleanSpark's going to miss the bull run because the bull cycle is going to be over in 2 years. Bull crap. The bull cycle can be over at any given point in time, but the people that are saying there is a perfectly predictable Bitcoin bull cycle are telling you lies, and they're trying to steal your clicks because there is no such thing as a perfectly predictable market. If anything was perfectly predictable, you'd have people front run the top and you'd have people front run the bottom, which would render it perfectly unpredictable because it's a marketplace of buyers and sellers. There's no such thing as that. So although, yeah, Bitcoin, there's the halving event every 4 years, there's also a lot of tailwinds at play here that haven't existed before. A president of the United States that is pro-Bitcoin. We just elected hundreds of representatives to our Congress that are pro-crypto, pro-Bitcoin. We have the future president of the United States, the Treasury Department, the Federal Reserve, all stimulating an already hot economy. Risk appetite still is very, very low. Look at the price of gold. Look at $7 trillion sitting in money market mutual funds. Look at the small cap index, how they're underperforming. Risk appetite is still nowhere to be found. Consumers, they're not in trouble when it comes to debt. It's actually more so corporations in the United States government. But you know what Bitcoin is? Bitcoin is a hedge against our monetary system failing. It's a hedge against our government going bankrupt. It's a hedge against inflation of the United States dollar. So if the next bear market is caused by hyperinflation or the monetary system starting to crumble or fail or show its cracks, Bitcoin is that hedge. It's that alternative. And it doesn't even stop there. You think of when Russia invaded Ukraine, and I've talked about this on the channel before, but when Russia invaded Ukraine, the United States took Russia's $300 billion that were sitting in United States dollars. We seized them, and now we're using that money to protect and rebuild Ukraine. So countries around the world are getting exposure. I guess I should say they're diversifying away from the United States dollar into gold and into Bitcoin. You have billionaires buying Bitcoin. You have CEOs buying Bitcoin. You have companies buying Bitcoin. So, I went on a long tangent here. But yeah, the fact is CleanSpark was a dog in 2024. But if you are really a believer in Bitcoin and you look at the fundamentals of CleanSpark, you should be hyper bullish on this company. If you're not hyper bullish on CleanSpark, you're probably not a believer in Bitcoin. And I don't know. I've had the privilege of talking to some different Wall Street analysts. I'm on their research distribution lists. I don't deserve it, so shout out to you guys if you're watching this. But from H.C. Wainwright, J.P. Morgan, Clearwater, etc., all of them say CleanSpark's management team is one of a kind. They also say that sometimes they don't even want to consider CleanSpark a Bitcoin mining company because they're fundamentally so far above the other companies, and their management team executes at a much higher level than the other companies. Those are the Wall Street analysts saying that. So I don't know. Do with that information that you will. Sathurtha, oh wow, that is a name. I apologize if I butchered that. Sathurtha said, it's kind of a fun name. I love it. Said CleanSpark has 51% off exchange short volume. So yeah, that is dark pool. So that tells you that the institutions, at least following this convertible note, actually short sold the stock more than they bought the stock. This was to be expected. I expected a ding in the share price today. The upside really should come next week if it comes. And people keep asking me about this share buyback. So yeah, I meant to talk about that earlier. I apologize that it took me this far into the stream to get to it. Share buyback thoughts. So yeah, as a part of the convertible notes, CleanSpark is going to buy back $145 million in shares directly from the bond buyers, which I think is a tremendous plan. I think it's a great strategy. And I can pull this up on the screen. I actually posted about this on X. Just give me a second to get this pulled back up here. Hang on here. But it was a big deal. And I used to be extremely against all convertible notes. So here's what I'm talking about. Let me switch the camera to this. This is what I'm talking about. Not that tweet. This one. I used to be completely against convertibles, but a few things have changed since mid-August. Here's an update for full transparency. Back in August, I said that I was not a fan of convertible notes because by nature, the people that buy those convertible notes are going to put kind of a cap on your stock price because they're short selling the underlying equity to hedge their long exposure to that convertible note. I talked about that at the beginning of this video. However, since then, and people have such a hard time understanding this, my opinion has changed a little bit because things in the marketplace have changed. CleanSpark and a few of the I didn't mean to do that. CleanSpark and a few of the other companies that recently did convertible notes have done convertible notes that utilize stock buybacks and capped calls to minimize dilution and kill the natural short interest that comes from holders hedging their long exposure to the stock via the convertibles. A lot of words there. Suffice it all to say, I'm a fan of the share buyback because it gets rid of that risk. It gets rid of one of the risks that come with convertible notes that I'm not a fan of. It doesn't completely get rid of it, but in CleanSpark's case, and I have it pulled up, let's see, they have $145 million that they're going to repurchase from investors in the convertible notes. So that's $145 million. That's a lot of buying power to offset any short interest. And they're also going to take on cap call transactions with a 100% premium to the closing sale price. So that just basically means that the capped calls have a capped 100% premium on them. I believe I said that right. I hope my words aren't too confusing there. But because of that 100% premium, these capped calls should be able to cover much of the dilution that might have to take place, and any of the leftover dilution that might have to take place will come directly out of that total yield that I just spent, 20 minutes talking about. And that again is an advantage that CleanSpark has that other companies don't. So let's say we do enter a bear market and these notes have to convert in a bear market. That can happen at any time. CleanSpark is going to have that ability to use that total yield to pay back this debt. Their stock is probably going to trade at somewhat of a premium because their bankruptcy risk is the lowest of any company. That's going to allow them to, if they do have to dilute, it's going to make that dilution less harmful to existing shareholders. So I don't have a whole lot to say there. I like the share buyback. You always have to be careful with share buybacks. And when I was big on PayPal, I'm still big on PayPal stock. We've killed it with that one. But a lot of investors, it's the same. When I say I've been here so many times, I have. It's the same cycle for every company, every stock I own. Investors start to lose patience and lose their minds, and they start to ask management teams to make moves in the business model that don't make a lot of sense long term. Like with PayPal, instead of buying back $5 billion of shares, they wanted them to buy back $8 billion of shares, which would outpace the free cash flow of the company for the year. That is not smart, but investors on the internet are so emotionally driven that they just say anything that they think will benefit the stock price, even if it makes no sense fundamentally for the company. So with share buybacks, the piece of the puzzle that you have to be so careful with, and I don't think most people understand this. Again, I suffice this all to say, I don't think CleanSpark is at risk of this. But when it comes to share buybacks, if you are using, let's say, your profits or your income, or you're using debt to buy back stock, you risk convincing the markets that your growth opportunities don't exist anymore, or they're shrinking, or they're getting smaller. Because if the growth opportunities still were there, you would instead invest that capital back into the business, into those growth avenues to grow the assets and the earnings and the profitability of the company rather than buy back stock. So that's a risk with buying back stock, but I don't think CleanSpark's anywhere close to that. So I think personally, the share buyback here is a very good thing. They attacked head on my main concern with convertible notes. I'm excited that they've done this. The conversion premium being only 20% is actually really good thing for shareholders. I don't know. I think all in all, this is a really, really good deal, but I would encourage everybody to share their own thoughts. Okay, let me scroll. We have a lot of comments here. Sorry. Daniel says, Rex, it has been said that miners are not participating as much in this rally used to higher interest rates. I think you mean because of higher interest rates, but if you're using 0% convertible bonds, then why would higher rates even matter? It's a very good question. It's a little bit different because a convertible note can be converted to equity. There's those two levers, equity or debt, that you can pull at a company to raise cash. A convertible note can be one or the other. And more times than not, it's going to be the equity. A convertible note more than likely is going to convert to equity rather than cash, because especially with 0% bonds, the buyers of the bonds or the notes aren't taking in any income and interest. They're not taking in any interest income, which means that they actually would be more profitable, more than likely, by converting to equity. But every company has a cost of capital. CleanSpark's, for example, Gary, the CFO, just mentioned it in the conference call, 8%. It was 8.6% or something during the last quarter. But no, the other piece to that, Daniel, is interest rates don't only affect the debt markets of the company. It also affects the amount of liquidity in the overall financial system. When there's more liquidity and the liquidity continues to grow, investors tend to take on more risk. And when people have more money in their pockets, even if it comes from inflation, they're more likely to invest more money into the stock market. So as you know, even if it doesn't really matter to the debt financing of a company because they're doing 0% senior notes here, convertible senior notes, it does matter for margin rates. It does matter for risk appetite of investors. It does matter for how much risk even institutional investors want to take at any given point in time, because you have to remember, well, I can go get, 5.5% risk-free on my money. And that's very enticing to a lot of people. And until that 5.5% comes down to 4.5%, 3.5%, 2.5%, you're not going to convince as much money, whether that's from retail investors, institutional investors, companies, governments. You're not going to convince much of that money to leave the 5.5% risk-free, because that's a really good return. It beats inflation by a lot, or it should beat inflation by a lot. So until that happens, you have a lot of money stuck in money market mutual funds. But if interest rates come down, that money comes flowing back into the stock market. Long answer for that, but really, really good question. Gemini says, how do you deal with people like Agrippa? I think I know who you're talking about. I don't know. Everybody has their own viewpoint. I'm not always right. I've been wrong in the past. I'll be wrong again. But I'm here to share my honest opinion. And, if somebody else disagrees with that or tries to tear me down, I don't really care. At the end of the day, I mean, we have 500 people that have tuned into this live stream live. There's a reason people listen to me. I'm not going to let any one person sway me away from sharing my opinion, even if it's a wrong opinion. I'll let people inform me if they're wrong or if they're right and I'm wrong. But at the end of the day, it just doesn't really matter to me. I just want everybody that comes across my channel or my Twitter page to leave better off financially than they were before they found it, I guess, is the way I look at it. And, obviously I have a really strong Christian faith. So everything I do, I want it to be a reflection of my Lord and Savior. I'll say that. So yeah, I don't know. There's some background on that. Here's a good question from Juan. Says, what if companies that already bought into Bitcoin using convertible note loans see a surge in Bitcoin price and sell and follow that same strategy? Wouldn't that mean CleanSpark misses out on this? Not necessarily, Juan, because the price of Bitcoin rising doesn't necessarily benefit spot Bitcoin buyers more than it benefits the miners that are mining Bitcoin for $40,000 per coin. They're still going to see that same capital gain on the Bitcoin. So not necessarily. No. CleanSpark wouldn't miss out on that. And that's also assuming that companies time the tops, time the bottoms perfectly. And I just don't think that's reality. I think a lot of these companies are going to hold on to their Bitcoin until they're literally forced to sell it. Unfortunately, that's how a lot of bull markets play out. Companies get over leveraged, which is a concern when we see all these convertible notes pop up. It's a concern that companies start to get over leveraged. I don't think we're there yet, but it's something we got to keep an eye on. Sathurtha again says, what's your time frame on CleanSpark? How long are you holding it? I'm going to hold this company for as long as I think the tailwinds for Bitcoin are in place. So that could be a very, very long time. I own CleanSpark in my Roth IRA, so that'll be tax-free gains. I don't really ever look at my investments with a set time frame. I think that's kind of a silly thing to do. I think you need to focus more on the macro economy and the tailwinds at play than any set time frame for buying or selling a stock. Now, obviously, nobody's ever gone broke taking a profit, everything like that, but I don't know. I think the good times could roll on into the 2030s, I guess is what I'm saying here. All right, Everest says, LOL, CleanSpark's HODL is one of the lowest of all miners. What are you talking about? Yeah, that's not true. CleanSpark is going to have the fourth largest HODL balance of any company in the world at the end of this month, only behind Marathon and Riot. And Riot just bought 5,000 Bitcoin. So they actually have the third largest. They're nowhere close to the lowest. So yeah. Juan says, I think Mara is positioning itself better currently than other miners. Could be. I guess I just don't see it. They're in so many different avenues. Like, they like to claim, no, we're fully focused on Bitcoin, etc. And yeah, They are a little bit to some degree, but they're also spending a lot of resources, for example, buying wind farms and not disclosing how much money they're paying to buy the wind farm and the upkeep of that wind farm and how profitable it will be and what they're going to do when the wind doesn't blow and I don't know, things like that. I just think Mara is very distracted, and I don't think they would have to buy spot Bitcoin if their mining operations were as profitable as CleanSpark's are. It's my opinion. Jason says, when you say profitable, this is a profit for the company. Where do the shareholders get the return ultimately? Share price increase or something else? Yeah, so obviously the marketplace is an interesting place, Jason. This is a kind of a question that gets researched every year by very, very smart people. In the end, the reason that stock prices rise is because fundamentally and just intuitively, I guess you could say, investors are always going to pay more for a company with higher profit margins, higher profits as a whole, growing revenues, growing profits. So as long as the earnings of a company are increasing and shareholders own a larger and larger percentage of the overall earnings of the company, based on the shares they own, the share price will appreciate. Share price appreciation, capital gains, yes. So yeah, profits of the company generally equate to profits as an investor. Miner Dgen said that was your best video ever. Thank you so much. I'm assuming you mean the MicroStrategy video that has like 80,000 views here. Yeah. Never thought in a million years that video would have 80,000 views. I thought it'd be one of my worst performers ever. Let's see. Do fundamentals really matter with Bitcoin miners? Yes. And people think it's such an unhealthy business. It's not, because at the beginning code of Bitcoin, there is no Bitcoin without Bitcoin miners, because the Bitcoin miners are keeping the network secure. They're making sure all transactions are legitimate, and Bitcoin is their reward for doing that. If the network isn't secure, Bitcoin doesn't exist, which means that by the code, mining Bitcoin has to be profitable for enough computing to keep the network secure. So Bitcoin mining will always be a profitable venture. So fundamentals do matter. Companies can still go bankrupt, but it's companies like CleanSpark that have cheap cost basis on their Bitcoin, are very efficient at their operations, have abundant access to capital, et cetera, that will outpace all of the other miners in the network. So fundamentals do absolutely matter. I've said on the channel before, I personally believe that Bitcoin mining price action is more driven by risk appetite of investors than fundamentals. But in the end, fundamentals always win. I know that kind of sounds bass-ackwards or I don't know, ironic almost, kind of an oxymoron. But that's the truth. At the end of the day, fundamentals will matter, and the company that has the best fundamentals is probably going to end up being the best investment of the space. 3-5 years from now, I don't think there's going to be more than 2 or 3 publicly traded Bitcoin mining companies. You're already seeing the transition away from it take place. You're seeing companies transition to HPC AI. You're seeing companies transition into just being a Bitcoin holding company rather than mining the Bitcoin. So yeah, fundamentals matter. Let's see. Dylan says, good evening from the UK. 2 a.m. Geez, thanks for joining me. That's awesome. Soccer Shop says, better to buy Bitcoin over these companies. Honestly, I don't know if that's true. People will make this argument all the time. But when you look at the returns of what I believe to be the fundamentally strongest company in this space, CleanSpark, compared to the returns of Bitcoin, they're roughly par for par. They're equal from Bitcoin's bottom. Each are up over 500%. So CleanSpark has matched Bitcoin's performance. As the bull market matures and goes on longer, that's when you start to see the Bitcoin miners run away with price action. We just showed you the leverage that still exists in mining Bitcoin. That relatively flat cost basis of less than $40,000 per coin. That's not going to change much if Bitcoin goes to $200,000 tomorrow. But the spot buyers still have to pay $200,000 per Bitcoin, whereas the miners, well, they can mine Bitcoin for a 58, 60% discount. That leverage still exists there. So I I don't agree with that, even though the markets are disagreeing with me short term. I don't agree with that at all. And this isn't new for the industry. This has existed in the past, where there's been time periods where Bitcoin miners significantly lag your expectations. Then all of a sudden, the snap of the fingers, literally within a month, all of a sudden they're doubling or tripling Bitcoin's performance. Orun says, it feels like CleanSpark's just going down and down as Bitcoin goes up. Certainly recently that's been the case. But I believe that's going to change very, very soon. You can only hold down a company that is this fundamentally strong and improving every day for so long. Jesse says, buy more when it drops low. Usually that's a good strategy, as long as you're not buying something that's fundamentally flawed. Sathurtha said CleanSpark's going to sell its Bitcoin around $180,000, they said. I don't think that's going to happen. They might start to sell some of their mining production, but I don't think they're going to sell the bulk of their HODL balance. I think their HODL is probably here to stay, especially if they can start earning that 4 to 5 to 6% yield on their Bitcoin HODL. There'd be no reason to sell it. If they buy another jet, you're getting out of the stock. I'd suggest you go watch my interview with Matthew Schultz. They have a very good reason to own that jet. I know from optics, it doesn't look great, but it does make a lot of sense. It does make a lot of sense. Trevor says, I hope the stock goes lower so I can buy more. I love it. I love it. CNC Flopper says, dude, you need to check yourself. That video has nothing to do with billion-dollar company's decision. All right. I mean, that's your opinion. That's fine. That's fine. The bottom line, though, is nobody was talking about it until I started talking about it. And that it literally went viral. 80,000 views. Everybody on the internet started to talk about it in the crypto universe. So yeah, maybe I need to check myself, but I don't know. That's my opinion. I think I had a large reason for a lot of what's taken place over the last couple of weeks. And I think a lot of people probably agree with that. At the end of the day, it doesn't matter. It really doesn't matter. Stock Nerd says, I'm up in the green a bit. Can't be that bad. Been in this since 2021. Yeah, so the problem, Stock Nerd, is a lot of people, they're not fundamental investors like I am. They're not contrarian investors like I am. So a lot of people buy CleanSpark stock when it's at $22 per share. And I buy CleanSpark when it's $2 a share. And then all of a sudden, when they're down 50% on their investment, it's the management team's fault. It's RexFinance's fault. It's everybody's fault but their own. And that's just a fact. It can be frustrating, but I try not to let it frustrate me. RH says, I would rather have the 5,000 Bitcoin now and add it to the HODL. So my question would be, why? Why would you rather do that? Because the markets are rewarding that right now, or because fundamentally it's stronger to do that? Because if it's B, that's just blatantly false. We discussed this earlier in the Excel spreadsheet. For $500 million, you can either choose to buy 5,000 Bitcoin today at $100,000 per coin, or you can build out a 16.5 exahash per second mining fleet that gives you the right to acquire Bitcoin for $40,000, $50,000 for the next 4 years. And at the end of the day, you end up with 9,600 Bitcoin. An additional 4,600 Bitcoin at the end of the day with immediate, $500 million in profit that you don't get if you buy spot Bitcoin. Doesn't make sense to me. I disagree with that, RH. But I'd be curious what your thoughts are. If you have something that I'm not aware of or I'm not thinking of, please let me know. Moonshine says, CleanSpark is diluting too much and paying too high of compensation. We are midway in cycle, bad decisions. They've diluted a lot, but it exists. I mean, accretive dilution exists. And I don't, for whatever reason, people don't agree. They don't acknowledge that it does exist. If you are selling equity and you're taking that cash and using it to increase the earnings of the company per share more than the dilution took away, that is accretive dilution, and that is good for shareholders. That is good for shareholders. And yeah, dilution sucks, sure, but if your share of the earnings of the company is increasing, even despite dilution is a positive. And now that they've done the convertible debt, dilution has probably disappeared for the most part for the next 2 years. So dilution, that argument's probably faded. Pay too high of compensation, I agree, but that doesn't change the fundamentals of the company at all. At all. They get paid too much money. Sure, $4 million, $5 million. Next year, they're going to do $800 million in revenue. Doesn't make a difference. And that, $4 or $5 million is considering all their bonuses as well. Let's see. Seeking Alpha has CleanSpark at a forward PE of around 6. This is based around the average of 5 different analysts. Seems like this won't really pop until Q1 2025, so I'm buying a little each day. I like that strategy. I would argue that a forward PE of 6 is way too low for a company that's going to be very lean moving forward and very profitable moving forward. I don't know. Everest says $460 million of profit. What about the cost to mine those Bitcoin? Comes out of your pocket. Stop the BS. Everest, we factored that into the spreadsheet. I mean, you can go back and look at it. Even considering the $40,000, $50,000 cost per coin, it cuts the profit in half. Essentially, if we assume a flat Bitcoin price of $100,000, that is still immediate profit that the spot buyers don't get. And that's the $460 million in profit. Where, you're mining Bitcoin that's worth $100 million, and it only costs you $100,000, and it only costs you $40,000 to mine. That's still $60,000 of immediate profit that the spot Bitcoin buyers don't get. I apologize if I'm not explaining that well enough, but I don't know. I don't really think I'm spreading BS. I think that's kind of a fact. They are not building out with the money, so the math in your spreadsheet is irrelevant. Yes, they are. I mean, I don't know what you're saying, RH. Are you just against the company and trying to attack it in any way you can just for the sake of it? Factually, the company is building out their infrastructure. I mean, they're approaching 37 exahash per second, and their hash rate has been growing consistently every day. And they have a pipeline of development in front of them that they need cash to build out. That is what they're doing. I mean, what else do you think they're going to use $550 million for? They're building it out. I don't know. I don't know. Anyways, I'll move on. Nilov Cam says, Course will have about $25 million of revenue per month with the HPC contract coming this spring. This is quite real, and they also have miners. So, yeah, I actually use Core Scientific as an example. I think they're the only legitimate play in this space. But even their CEO will tell you that there's going to come a day of reckoning in the HPC AI world, because he talked about this at the AIM Summit, and you can find it on the internet, actually. So Core Scientific, a leader in HPC AI, says there's absolutely going to be an AI winter. Because right now, the people that are signing up as customers for HPC AI services are revenueless and at best profitless. If they do have sales, they're profitless. And they're 100% reliant on venture capital to stay afloat. As soon as venture capital dries up, as soon as investment capital dries up, all of those companies fail. And that's risky when you're signing contracts with companies that fundamentally are very bad companies that don't even understand how to monetize what they're doing with AI. That's a significant risk. And the Core Scientific CEO talked about that at the AIM Summit, a leader in the HPC AI space. In Bitcoin mining, you don't have to deal with customers. Customer risk is a real thing in HPC AI. He needs to talk about how Matthew and Zach will have made $100 million each by 2026 through compensation. They have already made $60 million each. That is, that's false. That is false. I don't like, Everest, I don't know, man. It just seems like you're pulling stuff out of your back pocket. It's just false. Like, I don't know. I've done the research about this stuff. I've talked about executive compensation at length. I've gotten tired of talking about it. You can look at the Def 14A SEC filings from each of the last 5 years. No. Okay. So in summary, Jason says you might wait a while for ROI in the form of a dividend, 2029, 2030. I'm not saying that a dividend is 100% likely. I'm not saying share buybacks are 100% going to continue. That's just a way that you could get some return from your investment in the future from the HODL yield. JBF or JPB says people aren't listening on here. People want the quick money, and because CleanSpark hasn't performed quickly, people are impatient. Yeah, and again, I just don't. That's just fuel for me. It gives me better buying opportunities. It allows me to take advantage of opportunities when other people are so focused short term and emotionally driven. That opens up opportunity in the market. So it can get annoying. People flooding my mentions and comments with the emotional stuff, but I don't know. All right. Heinz says, yeah, I think what bugs me is the C-suite is paying themselves first before executing. It's what separates the Musks and Karps of the world, among others. Heinz, I mean, just a few years ago, people were very upset about Alex Karp's compensation package. And you have to remember, when companies' compensation packages are tied in with the stock, like CleanSpark's are, if the stock price does well, their compensation is going to explode on paper. But they really haven't sold much of their holdings. They haven't sold much of the RSUs, the options they have on their stock. They haven't done it. And I don't know, I wouldn't say that CleanSpark's C-suite hasn't executed. I mean, you look at the fundamentals of the company. We've gone to 37 exahash per second this year. We have the cheapest cost basis of any company in the world when it comes to our HODL balance. We have one of the most efficient mining fleets in the world. The only thing that hasn't happened necessarily is the stock price hasn't just absolutely exploded. That's the only thing that's happened. I wouldn't say they haven't executed. The market can say whatever it wants about a company short term, but long term, that execution is going to pay off. Let's see. Woodstock says, Rex, I was impressed with your insightful, logical explanation of how convertibles work. Tonight's presentation cover much to digest. Unfortunately, markets are not logical, whether the analyst unders. I don't know what you mean at the end of that, but thank you so much. That means a lot to me. CDA says, is everyone waiting for CleanSpark drop to $11 to buy or fly to $18 to buy? Yeah, that's kind of the other thing that bugs me is when people say, I'm going to wait till $10 to start a position. There's no guarantee that it's going to drop to $10 per share. And worst case scenario, if it does, you can always average down your cost basis. I think the risk of missing out on the upside is much heavier than the risk of seeing the downside. That's just my personal opinion. But yeah, it's very likely. I mean, next week, we've seen it. Next week, CleanSpark stock could go from $12 to $22 in 5 trading days. 5 trading days. I don't know. So Thurthus says it's been a 4-year cycle for mini cycles now. Yes, it has, but look at look at the black swan events that have happened every 4 years. It's just happenstance. It's just coincidence that the economy has felt some pain every 4 years, kind of on a schedule for the last 3 cycles. There's no guarantee that that continues, especially if you're stimulating an economy that doesn't need stimulus. We just had the most anticipated recession of all time be a no-show, despite interest rates going higher, despite the Federal Reserve raising interest rates. We didn't see a recession. So who's to say we're going to see a recession now that interest rates are falling? That would make no sense. So there are so many tailwinds at play here. You can't look at history and say, oh, that's a perfectly predictable cycle, because again, if it was, people would front run the top, they'd front run the bottom, rendering it perfectly unpredictable. That's just market basics, stock market 101, I guess. Let's see. Woodstock says, other than CleanSpark, Cypher seems to be another US-based miner with HODL. Yeah. If I had to purchase a different Bitcoin mining company, it would 100% be Cypher. They execute very well. There's some risk being in Texas, but you also can get really cheap power there. I like Cypher mining a lot. So if it wasn't for CleanSpark, I probably would own Cypher. Ray says, at what price do you see short sellers get wrecked? It could be any price. Short sellers covering kind of is just a snowball that occurs over time, slowly, where one short seller is forced to cover, which forces another to cover because you're buying back the stock when you're covering a short position. It just happens over time. There's no people are so used to the GameStop massive green candle. That's generally not how it ends up playing out. It's usually kind of a slow effect, but it adds a lot of buying pressure to the order book. Nilo says almost 70 million volume today. Looks like we are getting to the low ball drive. Not sure if we are going to see $11. Yeah, there was a lot of volume today. I would assume it's just primarily because of the convertible note, but we'll see. RH says Bitcoin may be a hedge, but the miners won't be. I think CleanSpark will absolutely be a hedge. If Bitcoin does well, the miners are going to do even better. Darren says this is the best argument I've heard for MicroStrategy. I'm not sure what you're referencing there. Okay, let's see. Why wouldn't you buy Bitcoin straight up? I've kind of covered this a few times. You can go back in the live stream later and listen to me talk about it. It makes no fundamental sense. You're better off using the cash to build out your mining fleet, to build out your mining operations. You're much more profitable. You end up taking in more Bitcoin at the end of the day, and your cost basis on Bitcoin stays really low, limiting your bankruptcy risk. That's kind of a very, very quick explanation of it. DJ says, very easy if you invest in Bitcoin ETF now. You buy Bitcoin at 100,000 and could reach 140, 160 in July, so with a gain of 50%. But if you invest in CleanSpark now at $11, you can have 100%. Yeah, I agree. That's kind of the leverage you're talking about with owning Bitcoin mining companies. Let's see. Jimmy says, solid video. Thank you, man. Bought CleanSpark first time at $2.20. Made another big buy at $10. CleanSpark trades at close to net asset value currently. Jimmy, you sound a lot like me. You do. So shout out to you, Jimmy. Great job with that. Heinze says, respectfully, we get that leadership doesn't have to disclose everything, but during a Bitcoin bull cycle and the company is executing by buying private planes, I think we can agree off-putting. No, I don't agree with that, honestly. They have locations in, 6 different states? I'd have to count again. Mississippi, Tennessee, Georgia, New York, Wyoming. That's 5. What am I missing? I might be missing one. But when you have locations in rural locations like that, a private plane makes sense. Owning the private plane makes sense. You push a lot of cash expenses into depreciation. So you get to use that depreciation to offset some tax expense at the end of the year. Every company, I shouldn't say every, but most companies in the Bitcoin mining space use private travel. They use private jets, but only a couple own the private jets. It actually makes more sense to own it, in my personal opinion, based on the research I've done. Stock Nerd says, I believe in owning Bitcoin straight up too. I agree. I bought my first Bitcoin at $23,000, I think it was. So I do own some Bitcoin. But I do think we're going to see some leverage return in the Bitcoin miners moving forward. Let's see. What else did I miss here? Crypto Dads, do you think and when will we experience a deflationary cycle and extended depression? I don't see it until we experience hyperinflation. And I know, my channel just a few weeks ago was very focused on macroeconomy stuff, and you guys loved it. And I'm going to get back to that very soon. I just think right now I need to pound the table about CleanSpark because I think it's such a great buying opportunity. And there's nothing that makes my day more than the success stories of Rex. I paid off my parents' debt, or Rex. I was able to buy my first house, stuff like that. And obviously it comes with consequences too if CleanSpark were to fall. I'll take some hate too, but it comes with the territory. When do I think a deflationary cycle and extended depression might happen? I don't think it comes until we see hyperinflation, which could be a decade away, if I had to guess. Eventually it will happen where our government prints so much money that our dollars are just worthless and they literally can't keep up on paying their debt because the dollars are so worthless. They can't print enough money to pay down the debt. That will happen at some point in time. You also have, the risk right now is not recession. caused by some credit crunch in the economy. The risk right now is reinflation. It's the Federal Reserve stimulating an economy that doesn't need stimulus. Throwing money at a problem that doesn't exist is another way to put it, which is going to put upwards pressure on inflation. You know, we think of how inflation has fallen. It's been energy prices falling, and it's been largely China exporting cheap goods into the global economy to export their way out of recession. Those two things that have led to a lot of disinflation in our economy over the last year, they're not sticky. They're not going to be around forever. Eventually, the goods economy is going to recover and bounce back. And eventually, energy prices are going to find a bottom and start to trend a little bit higher. And, you know, even if those two items just are flat year over year, that's a major source of disinflation that's now out the window. And there's a lot of inflationary pressures at play right now. So it's something that I'm certainly keeping an eye on, but I don't think we see a deflationary cycle until the Federal Reserve has to raise interest rates to 10%, 15% to stop inflation in its tracks, which I'm sure is going to happen again at some point in the future, because the Fed has told us they're going to avoid recession at all costs, but the cost of that is eventually you're going to have reinflation. So not for a while, but I do think that's in the playbook. That's in the range of outcomes. If you had to pick another miner than CleanSpark, who'd you go with? I just talked about that. I would be Cypher Mining more than likely. Bain says non-hodl miners are able to grow faster if they reinvest every dollar or hold cash anyways. It's not like they have nothing if they have no hodl. I'm not sure what you mean by that. Non-hodl miners are able to grow faster if they reinvest every dollar or hold cash anyways. It's not like they have nothing. No, okay, I see what you mean. I agree with that, Bain. But the thing that people don't realize is if earning a yield on your hodl balance is really the future of this industry, then it will cost those companies that don't have a hodl. Sure, right now maybe it doesn't matter as much, but when we're talking about CleanSpark having 18,000 Bitcoin on their balance sheet next year, and if Bitcoin's price stays flat at $100,000 per coin, they'd be bringing in $100 million of additional profit to the bottom line just by having a hodl balance and monetizing it. Other companies that don't have a hodl would be foregoing that. And at that point, they would have made a mistake. Maybe not right now. Brian says, if you don't own MicroStrategy yet, you should do a deeper dive. I just bought long calls on the miners, but MicroStrategy is a much better company fundamentally. MicroStrategy will reprice the entire stock market. I disagree 110% with that, Brian, and I don't mean any disrespect to you, but I'll explain to you what I mean. MicroStrategy is not a healthy company fundamentally. Their backbone business, they're a software company, is losing money and it's shrinking. They're buying spot Bitcoin, raising their average cost per coin, which means it's much more likely that in a bear market they're going to go underwater and they're going to owe people money. And if they have to sell their Bitcoin, to pay that debt, things get very, very scary. It's easy to see the tulips and the roses in the bull market, but don't forget about the other side of the equation. And it is just a fact. It's entirely a fact that MicroStrategy is 100% reliant on new debt to add value to the shares that people hold. It's kind of a Ponzi scheme in that way, where convertible debt holders in convertible debt A only benefit when the company buys more Bitcoin from the company borrowing more money from convertible note holders B. It's kind of a Ponzi. Fundamentally, MicroStrategy is not a healthy company, even though it's trading at extreme beta to Bitcoin right now. I disagree though in that when you say it's a fundamentally strong or better company, I guess is what you said. I don't agree with that. K-Man says, very nice stream. I bought the dip. Thanks, man. That means a lot to me that you'd show up and watch this. Okay, here we go. Dazo World, doesn't it occur to you that the rules of the game that apply to most companies do not apply to miners? Ultimately, as Bitcoin goes up, it seems to have simply become the playground of market makers. It could, but at the end of the day, it's really, really hard when you have a company that has so many shares outstanding and so many shares that are traded every single day. Wall Street doesn't collude in a way that, oh, we're going to hold down CleanSpark's share price. No, it's more so what I talked about in my viral video, the convertible debt holders shorting the rest of the industry as downside protection. That's a short-term technical thing in the market. And the other note here is this is not new. Like, I know some people are new to Bitcoin this cycle and everything, but I've been through this several times. Bitcoin miners matching Bitcoin's performance or underperforming expectations is not new. There's been many time periods in the past where that has happened. At the end of the day, every single time, the Bitcoin miners end up winning. They end up outperforming Bitcoin. And I don't think that's going to change. If the assets of the company are appreciating, if the earnings of a company are appreciating, there's going to be people there to buy the stock. I don't know if I agree with it's just a playground for market makers. If that were the case, I don't know. I just don't agree with it. I'll stop there. I don't want to go on a huge tangent. Brian Burke says it's a good business model, but the problem is it takes 4 years to mine that much, and then you have to pay all the overhead of running the business, and the hash rate increases with the Bitcoin price. Yeah, Brian, that is true, but I did factor that into my calculations. I said that the average cost per coin would rise from CleanSpark's current $36,000, $37,000 to an average of $50,000. I said that the price of Bitcoin would stay flat over that time period. I also assumed that it would get more difficult to mine, where 16 exahash per second today mines 300 Bitcoin per month, but I said on average it might go down to 200 Bitcoin per month over the next 4 years as difficulty increases, and we still came up with the same numbers. So yeah, it's true you have to refresh your mining rigs every 4 years, but the pressure to do so is probably coming down somewhat because of the pivot to HPC AI and the pivot to just buying spot Bitcoin. There's not going to be as much demand for mining rigs, which is not going to push the price of mining rigs up nearly as much as it has in previous cycles. So there's not going to be as much demand for more improved Bitcoin mining rigs, in my personal opinion. So I think miners you buy today could be profitable for 6-7 years instead of just 4 moving forward. Bain says, CleanSpark's making the right move. More exahash per second. That's right. And Mara aren't getting by buying Bitcoin instead of CapEx. I don't know. I'll keep moving on here. RH says they're moving this money, or they're using this money to pay Coinbase debt, buy back shares, and some other stuff. CleanSpark are my biggest holdings, so that is why I'm questioning. You should reread the press release. That is not at all. That's not all that they're doing with the proceeds. I mean, I think $200 million of the 550 is going towards buybacks and capped calls, and maybe another 50 million maximum going to pay off the Coinbase line of credit, which actually just opens up more debt they can take out tomorrow anyways, so it kind of is a wash there. Sam Osborne says, tourists are crying because they paid expensive tickets to a beach holiday, and when they arrive, it's raining. They leave back home. It's a great way to put it, Sam. Great way to put it. Let's see. Joel Blog says, hi, Rex. Thanks for the live stream. Sorry I missed the start. On a different subject, do you have any thoughts on why Flux is so low? Have your views on the company changed? Yeah, they haven't turned in their homework is the easiest way to put it. Right now, I'm just standing pat. I don't think fundamentally the company has changed at all. I'm not going to buy any more shares, but I'm not selling. Anytime you have filings that are late, it's a relatively small inventory issue, but I don't think it's changing the company's fundamentals too much. K-Man says, smash the like. Let's go. This guy's legit. I appreciate that, K-Man. Hard Knock says, a lot of naysayers are going to wish they loaded CleanSpark this week. Maybe. If not, oh well. Nipun says, what are your thoughts on Mara? You think an upside is coming? It's possible. The bottom line is, guys, we can nitpick all this stuff all day long, but what it breaks down to is all Bitcoin related companies, all Bitcoin related stocks are going to do well in a Bitcoin bull market at the end of the day. It's the way things work out. Some will perform better, some will perform worse, but if you're thinking about Mara, if Bitcoin does well, they'll do well. There's not much more to it, not much more to say about it. Renoir says, yo, Rex, hope you've been well, man. Hey, what's up? Good to see your face. It's been a little while. Jim Jones says, I have no clue what I'm talking about. I'm a paid shill. Okay, that's like saying you're paid to tell me I'm a paid shill. Makes no sense. It's asinine. How about talking about the $75 million the company is paying for the covered call? I did talk about that, Jim. I think it's a good thing. It will hopefully protect the company from any future dilution caused by the convertible if it does execute. Putting $500 million of debt on the balance sheet to buy a depreciating asset. What do you mean depreciating asset? If you mean mining rigs, I don't know if you know what you're talking about. Mining rigs, yeah, they depreciate in value over time, but they also produce something that appreciates massively over time, like fundamentally and mathematically. Buying the mining rigs and mining the Bitcoin works out much more in the favor of than buying spot Bitcoin. Anyways, geez, Jim's going crazy. You're being paid by management to spout this nonsense, you shell. Jim, cool it, man. I'm here to share my opinion. My opinion doesn't have to be correct, but man, I'm not paid. I'm paid by my shares in CleanSpark going up or going down. There's nothing more to it. I don't know why you're attacking me like this. Maybe I'll just ignore the future comments here. I don't know. If you actually listen to what I say, I feel like it's backed pretty good by fundamentals, Jim. Tim says, why does CleanSpark keep putting up net losses if they have a great cost per coin? A lot of different things. They took accelerated depreciation on their mining rigs in two quarters ago, I think. That will benefit the company moving forward. They accelerated the depreciation, which ended up obviously negatively impacting the fundamentals on paper of the company. But it's just different things like that. And they've been in hyper growth mode where they're acquiring new businesses constantly. At least they did so over the past couple of years. That's going to slow down now. They're going to change from being hyper acquisitive to being more of development focused, which I'm excited about personally. Okay, Jim, I think it's time to say goodbye. I don't really know what you're trying to accomplish here. I'm open to anybody's thoughts, even if you disagree with me, but attacking me for no reason is not okay. And making up falsehoods, smearing my image is not okay. I'm not okay with that. So, Jim, thanks for stopping by. Thanks for sharing your thoughts. I appreciate it, but I don't know. Might be time for bed. It's Friday night, getting late. Anyways, Prakash says, do you pay to talk about CleanSpark? No, I don't get paid. I get paid via views on my channel. I get ad revenue or my membership, and that's it. I'm entirely self-funded. I'm independent. If I wasn't, I wouldn't be able to do this morally. I never would accept payment. I'm not saying there's nobody out there that doesn't get paid to talk about stocks, because I know for a fact there are. I'm not going to expose anybody. But no, literally I've been offered, I'll just say 5-figure checks to talk about companies before in my email inbox. And morally, I can't do it. I want to focus more on stuff I care about and stuff that I can honestly talk about, my honest opinion, do my own research. I appreciate everybody supporting me. But no, I do not get paid. I don't know why people think I get paid to talk about CleanSpark. I don't really get it. I've done hours and hours of research into the company, and I feel like I have a well-formed thesis on the company. And maybe it's because I trust myself more than what the market is telling me. All of the emotional traders out there are telling me I trust my own research and due diligence more than them. That's kind of a point that I hope everybody gets to, where they just ignore that outside noise. I'm not perfect. Every once in a while I'll give into that, but I don't know. Let's see. Victor says, do you think any of this convertible note news was leaked to analysts in advance? So much coverage recently. It's possible, but even Victor, like if you go to my Twitter page or my YouTube page, I've actually been talking about this too. I've mostly focused on the downsides of convertibles because everybody else is focused on the positives and the upside, which, yeah, there's significant upside. Yeah, it can work out great, but again, I don't want to be part of the echo chamber. I want to be honest with you. There's a downside to convertibles that I've talked about, but I've also mentioned that I did think CleanSpark would eventually do a convertible, just based on the way they were talking in the earnings call. You know, they mentioned diverse capital raising strategies, based on the different interviews the management team has done, things they've tweeted on Twitter, or posted on X, I guess it is now, things like that. It really wasn't too difficult to know that this was coming. So was it leaked to analysts? Maybe. I don't know. But I think most people probably saw it coming. Tim said, would you be bullish on private jets if Mara bought one before CleanSpark did? They have a lot of sites in lots of states too. To my knowledge, Mara did buy a private jet before CleanSpark did. So I think your question is moot. Sorry to say. Okay. Anyways, guys, I think I should end this. We've been going for over an hour and a half. I didn't think I'd go this long. I'll leave this live stream up for replay. I think, probably the first hour before we got to the Q&A was probably the most important information about CleanSpark's secret strategy that I don't think people are paying enough attention to, that I think if we are paying attention to, we can end up making a lot of money. Cross your fingers. But it doesn't, there's no guarantee of anything, I guess is what I'm trying to say. But thank you guys all for showing up. It means a lot to me. We hit 500 concurrent viewers at one point. It's amazing that I get to wake up and do this every day for a living. And I got to shout out all my paid monthly members. You can join my Patreon or hit the join button located right next to the subscribe button. It's very cheap. You get extra access to my brain, my analysis, price target spreadsheets, fair value spreadsheets, etc. And if you don't find value in it, I have a 100% refund policy. That's how confident I am in providing you value. So be sure to check that out. With that, I hope you all have a great Friday night. I'm probably going to go watch a movie and relax. It's been a hectic week. I hope to meet more and more of you in person and shake your hands. It's always a great thing. It's always a great honor to meet people in person that are familiar with me. I hope to do more of that in the future. I don't know if that'll be at Bitcoin conferences. I don't know if CleanSpark will do more retail shareholder events, but I'll plan to be there and hopefully I'll meet more of you guys. Hard Knocks says naysayers are too funny. CleanSpark is an absolute no-brainer in my opinion. That's my opinion too. That is my opinion too. Anyways, guys, I'm going to end this here. Thank you guys so much for showing up. It means the world to me. I might end up cutting this up into a video, or actually remaking a video. We'll see, but I'll leave the live stream up for replay if you're just joining. A lot of the alpha, I guess you could call it, that I provided was earlier, probably in the first hour or so. I would encourage everybody to go back and rewatch that actually as well. My brain works in a way that I have to keep looking at something or keep learning about something to actually fully understand what's going on. If you want to join the Patreon, all you got to do is hit or Google RexFinance Patreon and it'll pop right up for you. Obviously not a requirement. Love you guys. God bless you. Have a great, great weekend. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.